In this video, I'm going to teach you some useful vocabulary for accounting and finance. So, let's get started. An accountant or bookkeeper is an individual who performs accounting tasks for individuals or companies. The accountant handles financial records, taxes, and is responsible for the issuing of financial reports. An auditor is a professional who is responsible for evaluating some specific aspects of a project, business, or individual. Auditors do audits and are often employed in the task of determining the level of efficiency present in the production process of a business, the efficient use of labor and other resources associated with the business, and the veracity of the financial records of the business. An annual report is a comprehensive report on a company's activities throughout the preceding year. Annual reports are intended to give shareholders and other people interested in information about the company's activities and financial performance. An income statement, profit and loss statement, revenue statement, statement of financial performance, earnings statement, operating statement, statement of operations. These terms are all used to designate a company's financial statement that indicates how the revenue is transformed into the net income. It displays the revenue for a specific period and the costs and expenses charged associated with revenue, including write-offs, for example, depreciation and amortization of various assets and taxes. The purpose of the income statement is to show managers and investors whether the company made or lost money during the period reported. To make a profit is the money that you make by selling something or from your business, especially the money that remains after you have paid all your business costs. Your total profit before you pay tax is called gross profit, and the amount that remains after you have paid tax on this is called net profit. To make a loss is when the company or organization spends more than it earns. The balance sheet or statement of financial position is a summary of the financial balances of a company or other business or organization. Current assets are assets on the balance sheet, which can either be converted into cash or used to pay liabilities within 12 months. Current assets include cash, cash equivalents, short-term investments, accounts receivable, inventory, and the portion of prepaid liabilities which will be paid within a year. Fixed assets are assets and property which cannot easily be converted into cash. Intangible assets are assets that cannot be seen, touched, or physically measured, which are created over time and effort, and that are identifiable as a separate asset, for example, patents. Tangible assets have a physical existence, such as cash, equipment, and real estate. Accounts receivable are also usually considered tangible assets for accounting purposes. Depreciation is a method of allocating the cost of a tangible asset over its useful life. Businesses depreciate long-term assets for both tax and accounting purposes. Amortization is the paying off of a debt in regular installments over a period of time. Book value or carrying value is the value of an asset according to its balance sheet. For assets, the value is based on the original cost of the asset, less any depreciation, amortization, or costs made against the asset. Current liabilities are a company's debts or obligations that are due within the year. Current liabilities appear on the company's balance sheet and include short-term debt, accounts payable, accrued liabilities, and other debts. Long-term liabilities are company obligations that extend beyond the current year, or alternatively beyond the current operating cycle. Most commonly, these include long-term debts, such as company-issued bonds. A bond is a debt investment in which an investor loans money to an entity, corporate or governmental, that borrows the funds for a defined period of time at a fixed interest rate. A stock is a type of security that signifies ownership in a corporation and represents a claim on part of the corporation's assets and earnings. A share is a unit of ownership interest in a corporation or financial asset. The owner of a share is a shareholder. Now, please take the quiz to check if you can remember this finance and accounting vocabulary. Good luck!